Roger, we've had John, of course, in the past talking about this very issue. You've been relatively constructive, I think, to paraphrase, sort of in the belief that it was in both countries' best interest to figure out a way to get past an impasse and figure out a deal. Do you still feel that way?
Yes, I do. But it is less clear to me right now that there will be a constructive framework here than I thought there would be 2 months ago. But President Trump has tied his brand, as we've discussed before on the show, to U.S. stocks and to economic growth. And his record in those two areas is reasonably good. I was skeptical when we last spoke, and I still am, that he's prepared to see us enter into a period of prolonged financial market instability because it goes so much against his brand. But if the U.S. and China were to engage in a true, no-holds-barred, all-out trade war, and the signals this morning are obviously a little less in that direction, but if we were, then that type of financial market stability would likely result, and I have trouble seeing President Trump accepting that and embracing that.
Right. The answer that we heard from Kudlow is to my question about whether the Chinese are just going to try and wait this administration out, take their time at the very least until 2020 and the elections. Do you think that's a possibility?
The real problem here, David, is that there aren't any signals, at least that I'm aware of. Now, maybe people like Larry Kudlow and Ambassador Lighthizer and Secretary Mnuchin have other ones, but there aren't any signals I'm aware of that when it comes to the most basic Chinese internal practices that you might describe as economic nationalism or China first, and what I'm referring to is forced technology transfer, intellectual property piracy, and, among other things, periodic state-sponsored commercial hacking. There's no evidence that the Chinese are actually prepared to engage in reforms in regard to these practices. And unless that changes, we're headed for a form of Cold War with China, and ultimately getting to a constructive answer which involves reforms such as gradually lifting tariffs in exchange for actual evidence of changes in those behaviors. That's going to take years. That's going to take a lot of diplomacy. That's going to take working with our allies. And I must say President Trump hasn't indicated much interest in any of those approaches. He hasn't been interested in working with the allies, and I think that's a mistake. I don't think he's shown that he has the patience to approach this on a multi-year basis, and I think it's going to take that. And, of course, long-term diplomacy is going to be part of this equation if we're ever going to solve it. But I think the core problem here is that China's internal behavior does not show signs of changing.
So, Roger, I mean, the president certainly escalated this fight by bringing in the currency, or maybe China escalated the fight by letting its currency weaken past a certain point. I mean, it felt like the market was just sort of digesting the whole tariff tit for tat. Not great on the new announcement, but the currency war really triggered some alarm bells. What do you think it is about that, and where does that even go?
Well, I think, Sarah, the difference between the tit-for-tat environment you referred to and then seeing that enlarge itself into a possible currency war, that's just a big difference from the point of view of investors and all people who have a stake in this, because you can't, people often think you can just control your currency, including the dollar, anytime you want by just twisting slightly some dial. That's not correct. And if you look at the history of currency crises and currency instabilities, you see that it isn't correct. So I think a lot of investors think to themselves correctly that if we're going to slide over the edge into a trade war that encompasses currency or a currency war, that is much more destabilizing than just political rhetoric. And that's what I think you saw yesterday, and I think that's one of the reasons China this morning, or last night in effect, as we saw, restored the trading level of the yuan to the very high sixes, 6.96, 6.97, and decided that it didn't want, at least for the moment, to let us go over that edge. That was a pretty profound decision that China made, and obviously it's had a stabilizing effect for the moment. But I think the difference between political rhetoric and tit-for-tat trade negotiations and trade volleys and currency wars is a big difference.